yesterday we had a tight trading range, which is a magnet. We broke out of the tight trading range into the close and gapped up on today's open. Pretty good size gap, so decent chance of a trend up or down. The odds favor up because of the size, because it's a gap up. But that tight trading range magnet, I think, tends to favor down. So I'm neutral on the direction of a trend. First bar, decent bull bar. The two-tick tail on top, I think, is not good for the bulls, but it's still a reasonable trend from the open bull. The second bar, smaller body, so that's not good for the bulls, losing momentum. Third bar, smaller body still. And fourth bar, even smaller body, no body at all. But, three up bars, trend from the first bar bull. Technically, it's a buy above the bar 4 doji. I definitely would not short below it, and in fact, I probably would buy below it. Decent breakout on 5, bad follow through on 6, little doji, possible final flag. I wouldn't short below 6, and we've had 6 up bars, first 6 bars of the day, so I certainly wouldn't short. I wouldn't buy above it. Here's the report, a large bear doji outside down bar. This is, I think, interesting. Next bar is the bear trend bar, bar 8. I wouldn't short below the outside down bar. I always prefer to short below strong bear bars, especially if the market is going up in a pretty strong way like this. So when I saw bar 8, I just placed a stop order to go short below it, and I was just going to wait. I possibly would have shorted above somewhere, but I'm going to keep that stop there, just working. Okay, now we have an III. There's no way I'm going to buy above the III because this is a very weak bull. At this point, look at all the overlapping bars. For about 8 or 10 bars sideways, we're getting more and more bear bodies. There's no way I'm going to buy a high 1 in this circumstance. So I think a high 1 is going to fail. So I think it's okay to short above any of those inside bars. You can short below 12. My concern is you'd still be in the tight trading range, so I wouldn't do it. I think shorting below 8 makes more sense. The range is bigger than about half of an ordinary day. We could get a trending trading range day out of this. Looks like we're going to try to break out of the downside. So the first target of the move below 8 should be the low of the day. There are some buyers at the moving average. You can see that tail. The moving average is up pretty steeply. And there on 15, the market broke below the low of the day. I think the market went to always in down on 13 because it's a decent looking top, weak rally, and we could get a trending trading range day and a measured move down below the open of the day, which would put us around yesterday's close. Bull inside bar on 16. To me, I'm going to short above it. I think that always in is down. The move down has too much momentum. I'm going to short and keep scaling in shorts and put a stop above 13 and just take my chances. Okay, there's a low one short here below 17. I'm starting to go sideways in here, so not ideal, but it probably is okay for a scalp. This could become a little wedge bull flag with one little final flag pushed down. Great looking bull reversal bar on 20, wedge bull flag. I think the odds are good that traders will be able to make a profit buying above this bar. The moving average is up pretty steeply. However, since it's the first attempt up on a pretty strong down leg, you have to be able to sit through pullbacks if you're going to take this trade. 21 is a weak entry bar, but I think the market should go up. So I think there'll be buyers at the low of 21, and traders might get trapped into shorts thinking it's a low too short. But to me, I'm thinking of it as a breakout pullback from a little breakout of the bear channel down to 20, and I think the market should have an attempt at 2 legs up. So I think long is the direction at this point. Always in long? I don't think so, but I do think the market should try to make 2 legs up. 23, possible low too short. As I said at the time, I think it makes more sense to buy below it. We have 4 up bodies here, and we should get 2 legs up, or at least the market should attempt 2 legs up. What about buying the failed low 2 above 24? I think always in is down. I wouldn't buy it. If anything, I would sell it. I don't think it's going to result in a breakout and a measured move up. Okay, wedge bear flag at 26, 2-bar reversal, probably an okay short. If you're going to have 2 legs up, you have to have a pullback in between. So the market might be setting up pullback. Lower high at 28 and a good bear bar at 29. Whenever I see a good bear bar, and I think it's a breakout, I'm looking to go short. So either short the close and put a stop above the high of the bear bar 29, or short 1 tick below its low, or short any pullback 2 or 3 ticks up. 32, we're in a training range since 15 or so. We may be trying to form a higher low and get that second leg up from the wedge bull flag. I personally would not want to buy above 32. The momentum down is pretty good. That bear bar 29 is pretty impressive. But I also would feel uncomfortable shorting the low 2 below 33. Market didn't care. Pretty strong bar in 34. Very strong bear close. You have trapped bulls in. You have the low 2 short and a good-looking 34 bear bar. I think that's okay to short the close. The market should at least get below the low. It may try to form a larger wedge bull flag here. Okay, I think it was an I, wasn't it? Yeah, I at 38, a larger wedge bull flag, so we could have 2 more pushes up. An obvious target is the 25 high, the start of this bear channel. Probably 60% chance the market works up there. Very high chance it'll get back up to the open. If this is a trading range day, it should get to the open. If this is some kind of a trending trading range day, it should get up there as well. This is kind of a tricky buy. Do you buy here or do you wait for the higher low? If you're able to scale in, I think you can buy here, but your stop is below the wedge bottom at 35. Okay? If you do buy the I, actually your stop is not below the wedge bottom. Your stop is below the I, which is the 36th low. So, but if you are buying the I, you have to have your stop down below the I. You can't just be getting out at the first pullback because you're buying a counter trend rally, and it probably will have pullback. Day 43 is a double bottom bull flag and a higher low. A little tough to buy up there because the market's been in a small trading range for about 8 bars, and it's forcing you to buy at the high. 45, no way would I short that. Yes, it's a low 2, but I think the odds are that the market's going to go up for a second leg. So if anything, I would buy at the bottom of 45.